Bitcoin just had its best week in 2 years, and the bond market did most of the work. Heading into the new week, Sunday, August 23, 2026. Today's agenda: Bitcoin's biggest week in 2 years came from bonds. A green Friday inside a red week. Spacex freed 1.5 million shares in August. 3 dates that decide the next leg. Now the other half of the story. Bitcoin closed Friday near $77,000, up about 22% on the week. That is its strongest week in 2 years, and the bigger push came from outside crypto. On Wednesday, the Treasury said it would at least double its buybacks of long-dated government debt. That means the state buying its own bonds, which is why yields dropped and the dollar sagged. More than $4 billion of negative crypto bets were forced closed. Forced covering is mechanical, so expect it to end. American spot Bitcoin funds then took in just under $2 billion, their best week since October. Crypto did get its own trigger, because the president pushed Congress to move the Clarity Act. Why should you care if you own no coins? Because this buyer is not betting on blockchains. Federal debt crossed $40 trillion this month, and gold hit its highest since mid-May in the same 5 sessions. Both moves are driven by one doubt about what a dollar of 30-year paper is worth. That doubt sets the discount rate under your mortgage quote and under every growth stock you own. Now, the other side. Those same funds are still down close to $3 billion in net flows so far this year because the first 7 months bled. Bitcoin also sits roughly $35,800 below a year ago, which means this is a rebound and not a record. Watch for a weekly close above $80,000. If that level holds, you own a trend, and the risk is that a failure there marks the high of a squeeze. There's a second piece to this. Friday was the good day inside a bad week. The S&P 500 added 0.4% on Friday to 7,674. The Dow rose 518 points on Friday, nearly 1%, to 53,277, and the Nasdaq matched the S&P at 26,180. Now, the week. The S&P 500 lost 1.4% on the week. The Nasdaq gave back 2.1% on the week, and the Dow shed 0.8%. Year to date, the S&P 500 is still up 12%. Bonds are the reason for that gap. 10-year Treasury yield sat near 4.7% on Friday, and the 30-year finished around 5.25%, close to a 2-decade high. Currency barely moved because the dollar index ended Friday just under 99, down over 2% on the month. Gold spot pushed above $4,600 on Friday and gained about 5% on the week. Read together, the bond desk runs the stock market now. Stocks won Friday on growth data and lost the week on yields, which means the number to track in your account is the long end. Watch for the 30-year to clear 5.5% because that repricing reaches your mortgage quote within a week. If it fails there instead, expect the equity tape to steady quickly. But there is another story driving the bond market right now. Here is the number almost nobody put together this week. In 15 days, Spacex moved roughly 1.5 billion shares toward the open market. 911 million unlocked on the 6th of August. 389 million were issued on the 14th to buy the coding company Cursor in a $60 billion all-stock deal. Another 319 million unlocked on the 20th. June's flotation sold 639 million shares at $135 each. Shares closed Friday just under $137 up on the day, but down about 2% on the week. That leaves them roughly 40% under a June peak, near $226. The reason this belongs beside a bond story is mechanical. A company whose value sits in cash flows a decade out is the most rate-sensitive asset there is, because a higher long rate discounts distant money. 30-year yields sit near a 2-decade high, and this company is adding supply into that tape, which means the buyer has to be paid to show up. Another 319 million unlock on the 9th of September. A bigger tranche arrives in November, and the full restriction lapses in December. Musk's own 6.4 billion shares stay locked until next June. Watch for the September tranche to tell you whether real demand sits under this price. If the float clears it, the discount closes, and the risk is that each block leaves the price a little lower. Trade talks between Washington and Ottawa broke down late Friday night. Duties of 50% landed on about $20 billion of Canadian goods at midnight. Mark Carney called it a miscalculation and will match it dollar for dollar from the 8th of September. There is a market reason to care beyond the politics. A tariff is a price, which means it lands inside the same inflation data the chair will be asked about at the end of the week. Meanwhile, the war between the United States and Iran is unresolved, and Tehran signaled on Friday that it would prefer to end it from strength. The risk is that both stories push one way, because tariffs and costly crude are input costs before they are headlines. Expect the tariff line to show up in goods prices rather than services. So what is your move for Monday morning? 3 dates decide the next leg, and they are stacked. Monday, Washington details the economic package aimed at Iran. For crude, the question is whether it reaches the countries still buying Iranian barrels, because China is the largest of them. Wednesday morning, the July core inflation gauge, second quarter output, and durable goods all land together. That same evening, the chipmaker carrying the artificial intelligence trade reports after the bell. Friday morning, Kevin Warsh gives his first Jackson Hole keynote as chair, roughly 3 weeks before the September rate decision. Here is my call. I think a September hike is still a minority bet by Friday because a central bank that stopped guiding markets will not pre-commit at a payments conference. Here is what would prove me wrong. Core inflation printing 0.3 on the month or hotter would leave a hike near a coin flip before the chair reaches the podium. Watch for the long end to answer first, because that is where your mortgage and your index fund both get priced. The whole hard asset move is a bet that this Fed cannot get in front of its bond market. This week in markets was a strange mix of fear and forced buying driven by the bond market. Bitcoin climbed 4 sessions running to hit $76,625 on Friday, even though long bond yields kept ticking up, because Treasury buybacks initially pushed prices higher before inflation data reversed them. The S&P 500 added 0.4 on Friday, but still lost 1.4% for the whole week. Gold is another story entirely. It pushed above $4,680.